We are live. Good morning, crypto warriors, and welcome back to Gem into Crypto, episode 1210, I believe. Today is Wednesday, April 10th, 2024, and I'm King here to bridge the gap between the community and crypto. Most days, Monday through Friday at 10ish. And today's top stories: with 10 days to the halving, analysts predict 150K Bitcoin top. Retail interest in crypto quite low compared to last bull run, says Lunar Crush CEO. Bitcoin ETF see surprise $200 million outflow with the new $69,000 support hold. Former Ethereum advisor files $9.6 billion lawsuit against U.S. government. And Bitmax co-founder must face suit over God access, trading desk, the judge rules. But first and foremost, of course, let's go ahead and take a quick look at these prices on the day. Woo, you already know. Bitcoin, the entire market in a bit of a slump ever since the lunar eclipse, which of course ended up being a big nothing burger. The world didn't end, the weather patterns didn't change. No, nothing happened. In fact, they were talking about how dark it would be in Southern California, and I must have blinked and missed it because I didn't see it. But Bitcoin is coming in at $68,047, 0.42% on the, or that's hour clock, down 0.29.2% on the 24-hour clock. Ethereum is at $3,450, down 4.19. Number 5, Solana at $165, down 0.477. Number 8, Dogecoin at 18 cents, down 3.65. Still can't believe that's in the top 8. Toncoin, wow, at number 9, it is still pumping like crazy. At $6.81 a couple of days ago, it was at $5, up 2.91%. And Cardano at number 10 at 56 cents, up down 6.95%. Trending tokens are Saga, Solgat, as you can see, there's script on me, and Inspect. And recently added is Costco Hot Dog. Hey, listen, I can see that actually blowing up. People have been talking about Costco a lot. Trex 20 and Stray are your recently added tokens. Fear and Greed Index is at a 75. Bitcoin dominance at a 52.6, and Ethereum at a 16.3 on the day. There we go. Really quick shout outs before we get this show rolling. Satoshi Slim, what's going on? Jake Fever. Let's see. Oh man, yeah, I was already in Tampa, man, a few weeks ago. I wouldn't have really had time to break though. It was kind of nonstop there, but yeah, I did the Tampa trip already. Hi, Ben, what's going on? JB, Serious Bach. Give us some clickbait price predictions, and we'll get into a couple of days. But if you want more, so again, for all my LA folks, want to reiterate, I'll be putting out flyers probably toward the end of this week. Just spoke to Board and Stone yesterday. If you remember, that's a cannabis dispensary out in Los Angeles that also accepts crypto right now. They're using Coinbase Commerce, I believe. They accept Bitcoin, Ethereum, and a couple other things. But that event is actually a double event on 420. It begins on 419. For those LA people, they're going to be having Sabi the Third performing. So I'll probably be there on 419. And then 420 from 12 to 4 p.m. I'll be there as well, talking crypto. More of a meet and greet, crypto pop-up, as well as a cannabis pop-up for 420 as well. So again, that's in Board and Stone, Koreatown. I'll be putting out some more of that information later this week for those who are in Los Angeles and are interested in swinging by supporting crypto and cannabis. I mean, that's a pretty cool combo if I say so myself. All right, let's go ahead and hop into it. Top story of the day. I mean, listen, all right, Zotan. I got to hit up Zotan. Because people, how long ago did I call this? I want to make sure this is clear. I gotta give myself a pat on the back. A couple years ago in 21, when everybody was screaming for 100K Bitcoin, 120, I was like, I'm feeling 75. I was like, 75 feels about right to me. And lo and behold, I think we touched 69 to 71 or something before we dipped for another however long, right? This time, I think last year, I was already saying this cycle, I'm seeing about 150, 160. I keep saying that. I'm seeing 150, 160K Bitcoin before we hit an 80. I think it'll be an $80,000 candle one day. $60,000 to $80,000 candle, easily 40 to 60%. Wipe out a lot of the market and scare a lot of people. We'll be talking more about wiping out the market and scaring people. But, it's not official, I guess, until Cointelegraph gets it from one of these weird analysts of these companies. But Bitcoin price could rise another 160% after the halving, hitting the $150,000 mark, according to analysts. With only 10 days left until the much awaited halving, Bitcoin is still trading above the $70,000, at least during the story. Psychological level bolstering bullish long-term price predictions from market analysts. Following the halving, Bitcoin price could appreciate over 160% to reach a cycle top of above 150,000, according to research report by Bitfinex analysts shared with Cointelegraph. I got to read these reports because I seriously think a lot of these reports are. Let's check out Gem into Crypto and then figure out some numbers to make this right. Quote from them: using a straightforward regression model, we predict a 160% post-halving price surge in the next 14 months, taking the price to between 150 and 169,000. Again, you don't even need this. Is what I'm talking about. All these people who just swear TA and all, you don't even need to do this straightforward regression model. You just need to be in the market, look at some trends and charts and how we've been, and you'll kind of see where that number kind of falls into. And again, when you really look at it right now, I mean, that's a little bit over half, 70K right now, 140, 150. That's a little bit over half, or excuse me, that's a little bit double. I said over half. That's double, which we've seen in this space too many times before. In fact, every happening, Bitcoin does more than double. So to say it's just going to double this time actually isn't that bad, right? It's only going to go another 100, 200% this time versus originally when we've seen it go 500 to 1,000% or whatever. So that number just saying at 150 isn't that big of a deal when you actually look at it from a percentage point of view. So again, this is pretty cool to see. They're saying that this underscores the active engagement of short-term holders at higher prices, reflecting evolving ownership dynamics amidst market activity and institutional influence through spot ETFs. Increased entity movement suggests a shift in the cycle towards the gradual distribution of dormant supply and profit taking. All right, that's like a lot of words. So this is what like I strongly dislike about this. What this space is trying to become into. They're only doing the word soup to make themselves seem smarter and look better than others and to push people out to make them feel like they can't do it. Basically, they're saying, look, there's going to be a lot of people who are holding, but there's also people who have been holding since the last all-time high or 60K or whatever. And some of these people might actually go for the sale. This might be a sell the news event. Well, we talk about that here in a moment. That's basically what all that buzz, that word soup is saying for the most part. And here that story is. Next, let's go ahead and roll right into it. Retail and crypto interest, retail interest in crypto quite low compared to the last bull run, says Lunar Crush CEO. And again, I think there's a variety of factors for that. Off the top of my head, I would go ahead and list some people are still holding from the last bull cycle, as in they got in at 69, 70K or whatever. And they're like, shit, we took a massive dip. We're just now retouching these numbers. These people are still holding. If anything, they just want to go 5 to 10% and they might sell. Some people have already sold, right? They bought in at 69K. That number dipped back to 40s, 30, 20, whatever, and they sold. They're out of it. They don't want to come back. Third is I think people are just kind of getting tired of the games, right? It's one thing for traditional stocks to pump and dump or to have these volatile moments from 2 to 5% or whatever, right? And that's crazy on the traditional stock market, but a lot of people cannot stomach the day-to-day of crypto. It is mad people to see your investment go down 20% or whatever. I mean, for those who are in that couple of those far off degen altcoin moves, I chose, I even said, I'm like, hey, I'm holding this for next year, year and a half. I expected to dip within that time, like another coin, like Casper did. Casper had at the initial beginning had all types of dips and dives, and eventually it came back and is at 14 cents now, right? So, to me, it's just one of those things where like people get tired of it. It's too much volatility sometimes. They don't want to see their 10K, 5K, 500, 20K, 100K, whatever, go down 20% overnight and then have to figure out what to do next instead of just leaving it alone. So I think a lot of these conditions are just people tired of the market. And let's not forget, the government is still picking and prodding at the market as well. So there's people on the sideline saying, hey, I want to get in, but right now the government's still fucking with it. I don't know when's a safe time. So I think it's just a ton of shit that's just wrapped up that's causing the retail investors to say, we're either already in the market or I don't need to put any more in or I'm just taking a break. Whereas the institutional side of the house, they haven't been here before. They weren't with us on the last few runs. They weren't with us on the last few happenings. This is actually their first real public appearance at the dance. So for institutions, they really got to show up this time to say they're here to stay. And that may be why we're seeing more of that institutional investment this go round. All right, there we go. Omax said for the DGens, Toby just dropped on the base network. Do we have our first ultra meme coin? We will see hopefully this week. Let's see. Power of 9 said the problem is when you sell Bitcoin for USD, the Bitcoin is more deflationary and gains relative buying power, while USD is inflationary and decreases your buying power over 1 to 5 to 10 years. So if you sell, you need to buy something. I fully agree with you. I'm actually, this is going to be the first year I'm getting back into the traditional stocks, but not to actually go crazy on the investment. I will be going into Chipotle, fair warning, because like that's to me is just a layup. I got to do that. But some of the other ones I looked at, like, Verizon. I've had Verizon since I was like, how long now? degree deodorant, like some of these products I've used for forever that have been around the last 10 or 15 years. I'm going to segue some of my money into them as a savings account, right? It's like I can actually trust Verizon and degree deodorant to be, I can trust Dove to be a savings account for the next 10 years versus an actual bank account, the way I'm starting to look at it. So I am going to actually diversify some this year because I do not want to put everything into crypto, only because after this pump, like I said, I do see a big dip happening. While it won't last forever, it will be another momentarily dip. So I'm trying to set up to take as much profit as possible, segue into Bitcoin or stable coin here or there, and be ready for a big dip and then re-enter at some point. Now, again, this is going to happen over the next 12 to 16 to 18 months. We have all the way into the middle of next year, October at the latest, to really catch a nice bull run. I think we'll catch it way before then. But this is the kind of that totality investment scheme I'm looking at. But Lunacrest CEO Joe Vizani believes that despite the upcoming Bitcoin halving, there might not be a significant shift in retail engagement. That's right. Retail investors are not yet believing the hype, according to Joe Vizani, the CEO of social media analyst platform Lunacrest. I agree with that fully. They are not believing the hype. But again, I think it's because some of those things we listed, the volatility, the government picking and prodding, FUD, every chance a government or mainstream media is turned, they're making it seem like Bitcoin is this horrible thing when in reality it's just software. So yeah, I believe they don't believe the hype as well. Benzani said that compared to the last major bull run, social interactions and overall retail interests are still quite low. In the last 6 months, post mentioning Bitcoin showed bursts of activity in January and March. And again, while this is true, I think this is because we're just retouching the all-time high. Believe you me, when we touch 90 something thousand, 94, 96, 98, 100 that quick, 102, 104 up, back down to 96, back up to 112, 116, back down to 102, back up to 125. When we start getting that action, you better believe retail is going to come a running, buying $100,000 Bitcoin, and then giving us that slight pump we need. Because at this point, institutions will actually start to phase out in the short term. They will buy, all right, we've been buying for the last few years, and we got it up to 130, 140. That's where you can rely on retail to come in and say, hey, we only buy the top, baby. We're going to push that 140 to 150, 160. And I think that's how it's going to happen. This quote from Mizani is saying, in terms of the number of creators and influencers posting daily, we have witnessed growth. However, the notable change we are now observing is in the level of engagement with these creators. I agree. And if you notice, that is why I'm doing this show less. It is honestly just supply and demand. I mean, listen, we keep our same good crowd here on the podcast. A few thousand people is awesome, whoever. But the engagement definitely is low. And it can become frustrating when you're looking at the scammers in the space telling you how to 10,000 or whatever, and some shit, and they get the numbers. You're like, okay, well, hell, follow the scammer. This is how you know it's real, at least on this side. What they always say, where like if people are so geniuses, or they know how to trade and do all that, then why do you not do it full time? Why do you sell and do all this other stuff? That is literally why you don't see me all the time, because I actually do trade, do make money in the background, and I do have other things going on. So when I don't see the engagement, it's like, all right, like, I mean, hey, I'm in LA, baby. I got a great day ahead of me, or plans to make tons of money or whatever. Like, so I do understand where they're coming from with that when they're talking about the retail side of things, and they're not observing engagement and things like that. Like, it can be disheartening. But again, I think it just comes from the retail side being tired. They're tired of being lied to. They're tired of being scammed, FTX and Sale Bankman Free, and some of the YouTubers out here. They're tired of the government lying to them, posting FUD. They are just tired. They don't know which way to go. So some of them are saying, we're going to wait to see what happens. And even if that takes another 5 or 6 years, and once it happens, right? It's the new digital gold or whatever. And if you're not in, you're out. I think people are willing to risk that. It's a crazy risk to me. It's crazy to me to say I'd rather stay in the same position than to take a risk and possibly change my life forever. For me, that's super weird. I'd rather just take the risk, and if it doesn't work out, keep working your day job, right? Keep getting paid and figure it out for the next move. But there's a lot of people in the retail market saying, no, like, I'd rather just wait and just be on the sideline. And if it is this great change, and I guess I'll be on the outside looking in, i.e. everyone who has a green bubble. Just kidding, folks. All right. Hey, listen, Apple products are amazing, right? Unless you go to Linux on the side. I don't know what's the problem with Apple products. There we go. Fever knows up. Jake says facts, no engagement, no problem, still gonna get to bed. Listen, that is what helps me still come on every day. Like, of course, we got you all our real supporters. I fucking, love y'all, mess with y'all heavy. But it's also like, yeah, no engagement, no problem. Like, it's never like that big of a deal, or I made that big of a deal, because it's like, if you can actually trade and do what you're supposed to do on the back end, it doesn't matter. You should be doing good yourself. So it's all good. Let's see. What else do we have going on today? Segueing into the next story. All these stories are just ping-ponging off each other. Bitcoin ETFs see surprise $200 million outflow with a new $69,000 support hold. Bitcoin price action takes an uncertain turn as weak Bitcoin ETF inflows sparks nervousness. Just off the headline itself, this is where I think we'll actually get that $80,000 dip, or a 40 to 60% dip. We are assuming when we get these price changes that the institutions will hold steady. They will hold the line even when the price of Bitcoin dips, which it will inevitably do. Let's not get it twisted. Since the institutions have entered this space with Bitcoin ETFs these last few months, there has only been upward mobility, upward trajectory. They like the way I look at these big banks and wealth firms and institutions now, on the investor side, they understand that it's going to dip and the price won't always go up. All right. They understand that. But I also look at them as like public companies, because public sentiment matters a lot when it comes to who's going to keep their money in your bank or your ETF, and who's going to pull out, who's going to give you those phone calls Monday morning, Tuesday morning, Wednesday morning, Thursday morning, Friday morning, Saturday morning, Sunday morning. Why? Because Bitcoin doesn't sleep. So they were ready to give you a call every morning if this ETF isn't doing what it's supposed to do. Now, when you talk about public companies, they have to please the board. They have to please their public stakeholders, right? They can't just do what they want to do. So when I'm looking at Bitcoin ETFs, and so far with all this investing going on, I'm just looking and waiting to see, like, all right, so if Bitcoin dips 10, 15, 20%, the ETF or whatever investment scheme or strategy you're in as an institution, you're going to hold the line, you're going to hold strong with millions and billions of dollars. I mean, people, it's one thing for me to lose 20% on a portfolio of however much, a few thousand, few hundred thousand, whatever, right? It's a totally different thing to lose 20%, 30% of 200 million, of 3 billion, of 15 billion. That 20% is a huge chunk. And again, for people who are well versed in the market, you might not sweat it. You're going to say, hey, that's going to come back. Don't worry. But again, if you have people, the firefighters fund of New York, right? If you have the police fund of this, or these individual investors who are big money folks in ETFs, or just your normal mom and pop, and they see that in the Monday morning news that the market's done and just dipped 30%, you're getting the call. You're getting numerous calls. And the question is, will institutions still hold, or they begin to sell? I think some of them will sell. They won't have a choice. It'll be one of those things where it's like, not necessarily get liquidated, but you're kind of almost about to get liquidated if you keep letting it drive down. And this is where we get the massive dips. All it's going to take is for one or two to actually sell or to do something different and stop buying as much they've been buying as previous weeks, and you'll see that price drop even further. Add that with some retail investors getting scared out the market, shaking out the market, that dip goes even further. Next thing you know, you have that parabolic 70K candle, 80K candle, or something crazy. All right. Now, again, for us who's been in the market, we're not worried. We're like, crazy dip. Hopefully this one can recover within the year. If not, we'll see everybody in another 2 or 3 years when this thing comes back to 300 to 400K and we rinse, wash, and repeat. But in the short term, I do see that as happening. So when I see stories like this already, where it's like, all right, 200 million, like we finally slowed down and we saw the price dip as well, that's making me think, hey, is the only reason the price is where it's at is because there's been nonstop ETF buying to begin with. All right. So again, this is data from Cointelegraph Markets Pro and TradingView. It showed that Bitcoin price downside gathering momentum before the Wall Street open. The day's lows of 69,635 on Bitstamp represent a 4.3% drop versus the previous day's local high, with wavering short-term sentiment to match. But again, this is them just having something to report. I don't even consider 4.3% a drop. Like, at this point, 4 to 6% is fair game every day. If it goes up 4 to 6%, we. It's like it gets exciting when it does it 3 days straight. Then it's like, oh shit, we're on to something. Like, hold on, we get 4, 8, 12, 6, 12, 18. Like, that's different. But when you're talking about a 4 to 6% drop today, tomorrow is up 3%. The next day is down 6%. The next day is up 2%. The next day is down 1.4. The next day, I mean, we're seeing that right now. So to me, this is a non-starter. Like, literally, this is the daily. Like, this is the daily market of crypto, to have a 4 to 6% swing. So it's not a big story. But again, on Wall Street, it is, because you're talking $200 million. You're talking a couple of $1 billion. Now that 4 to 6% is something that's worth discussing, even though it happens on a daily basis. So, and again, this is Wall Street being greedy too, because they want to figure out, they want their computers and their analysts and their bots and their algorithms to figure out how to stop losing that 4.6% and driving them mad that they can't figure it out. I don't think they will figure it out here in the short term. But again, the U.S. spot Bitcoin ETF took a little capital, and combined with a $300 million outflow from the Grayscale Bitcoin Trust, the day's net flows were heavily negative. According to data from sources including the UK investment firm Farside, net outflows total just over 200 million. Surprisingly, even though Bitcoin pumped up yesterday, the ETF flows were significantly negative. One of the largest ever days we have had, popular analyst Mark Cullen wrote in response on X, formerly Twitter. So looks like the two largest ETFs, BlackRock iShares Bitcoin Trust, IBIT, and Fidelity Investment Wise Oregon Bitcoin Fund, FBTC, nonetheless avoided losses, maintaining an unbroken streak of inflows. So they're still kicking ass and taking names. But again, those are the smaller ones we've told you about. You remember when I said that, hey, when it's all said and done, I wouldn't be surprised if it's essentially just BlackRock and Fidelity and like every other one gets consolidated or ate up. We're seeing that happen right now. Oh, you thought you can keep up with the big boys? No, you can't. You can't. You can't. You can't. And now what's really going to happen is the competitive side of the business. What's going to happen when Grayscale, or excuse me, I said Grayscale, what's going to happen when the BlackRocks and the Fidelities see their competitors, once they start slowing down those inflows, that means capital's getting dry. They're low. They're primed for attack. They're weak. It would not surprise me to see a government subpoena, some type of hack, some type of scaling issue, something happened to some of the smaller Bitcoin ETF companies. And the reason why I said it wouldn't surprise me is because it won't be coming out of left field. It'll be coming out of it'll be a swing, it'll be a shot in the dark from a competitor. Those competitors being BlackRock or Fidelity. You are absolutely out of your mind if you don't think they have people like me working behind the scenes saying, how can we get rid of these 1, 2, 3, 4, 5, 6, 7, 8, or 9, 8 Bitcoin ETFs that serve us no purpose, that are competitors, and we can literally just take all their volume overnight, and we're already prepped to do so. I don't know. Let me call some friends in the government. Let me call some regulators, make sure they're on the up and up. Let me call some investors in these companies, make sure they're happy. Like, let me do everything to disrupt what they have going on so that they can say we're out of the Bitcoin ETF game and we can take it more. This is the way it works, people. I can see that happening once again, especially now that news like this is breaking. We're like, hey, we're starting to see chinks in the armor. They're slowing down. And I mean, BlackRock and Fidelity, and like, they're probably like just sharpening their claws right now. Just so excited about it. Let's see what's going on. Paralysis by analysis, find 2 or 3 for confluence. Anything seems so. Oh, okay. Let's see. Looking at some of these comments, see, we have Go ETF had positive inflows into ETF from 2003 to 2013. Then boom, down 2013. Yes, buy the dip. Use your moving averages, 200,000 and 150 and 20-day in RSI, MACD, and VWAP. Bar chart also has some good TA. I agree, but again, my TA, whenever I'm really looking at it, I have to add the fundamentals before, because at this point, like I said, it's just so much stuff that can happen. I mean, the easiest example is Elon tweets. Elon tweets could literally change the market, and there's like no amount of TA we could do that would guesstimate his Monday morning. Like, oh, you know what? I guess I'm about to go on a Dogecoin dogwood if or whatever favorite meme coin tweet rage and tell people how this is going to be the future market and not Bitcoin, and this is going to change the whole dynamic of the market, right? Like, we could never guess that or chart that. It just happens. So let's see. One engagement, make a goofy face thumbnail with title Bitcoin to a trillion. Hey, listen, I'm about to start I got to start doing them again. All right, let's see. Last couple of stories here. Former Ethereum advisor files $9.6 billion lawsuit against the United States government. Listen, I'm all about people fighting for their rights. And if this really happened, then fight on. Former Ethereum advisor Stephen Nerioff wants the U.S. government to repay $9.6 billion in damages for extortion charges that were eventually dismissed after 4 years. Shit I've been talking about. Somebody's fighting back. And again, I'm not familiar with this story, so I don't know how much true, false, whatever is happening here. I'm just reporting on it. Why? Because it's something I've been talking about for forever now, and that's the U.S. government extorting its own people, which is fucking crazy. Or actually, this isn't our own people in this one, so maybe that's like, hey, government's like, hey, lay off us. We did it. We did another Citizen King. You said leave us alone. We're gonna have to do it like Russia do it. Russia be like, look, as long as you don't commit crimes against Russians, we ain't got no business with the business. All right. Stephen Neroff, an early advisor to the Ethereum network, has filed a lawsuit against the United States government for false charges and mistreatment by federal agents between 2019 and 2023. Seems believable already. Neroff, known for publicly accusing Ethereum co-founder Vitalik Buterin of fraud, filed a Federal Tort Claims Act (FTCA) lawsuit suing the U.S. for $9.6 billion in damages for the extortion case brought against him in 2019. The legal battle lasted about 4 years, with the U.S. government eventually dismissing the lawsuit in May of 2023. This is what I'm talking about when it comes to XRP, Ripple, as well as a ton of other tokens, Bitmax, Reggie Middleton. Like, fuck no. Fuck no. The United States keeps picking out small businesses and brand new companies to say, hey, we're just going to pick and prod. We're not going to let you do your business. We're going to subpoena you. We're going to say you're breaking laws that we can't even name. We're going to tell you you have you're creating victims where we can't find victims. Like, literally, we're being corrupt. And at the end of all this, the government is just going to dismiss it and be, oh, okay, our bad. Y'all go about your no. To me, this is the same as being falsely imprisoned for 4 years. You can't do this to a business, to a person's livelihood. Like, I want to be clear. The way I roll, and I've said this many times before, if you are coming, and people are crazy to me not to think like this. If you're coming after my business, after the people who do cancel culture and all this other stuff, if you come after my business, that is the same as if I had children, you're coming after my children. You're coming after my family. Like, to me, I don't separate the two. You're coming after my money. You're coming after my livelihood. You want me to die. It is the same as you shooting me without actually pointing a gun, shooting me. I'd rather you actually fucking shoot me to get it over with quickly than to try to drain my business, keep me in and out of court, the threat of going to prison, the threat of debts, and all this other mental torture. I'd rather you just go through with it. So no, if a person's coming after my livelihood, including the government, where in this case, went after this guy for 4 years and dismissed it, that is the same as being falsely imprisoned. That is the same as having your life threatened as me. So everything this guy were to do back, bad, good, or ugly, I would not judge. Okay, whatever. Like, if we would have created a terrorist overnight with this shit, I wouldn't judge. Like, why would he do such a thing? Why would he do this to Americans? And then, like, he lays out, the government been fucking me for 4 years. It's like, oh, yeah, that drives somebody crazy. Like, we don't know this guy's life story. Does he have children to support? Does he have a wife or a sick mother? Like, we don't know his story, but the government just says, because you're a competitor, we're going to fuck with your business for 4 years. And then at the end of it, say, okay, our bad, you're free to go do what you want. Hell to no, this shit ain't over. This shit ain't over and ain't over and ain't over. If I was him, I'd be collecting names right now. It ain't over, okay? Not that easy. You just mess with my livelihood. I don't understand why people think that shit okay. I'm telling you now, you come after my business livelihood. Hey, that's a good way to make me crash out, people, okay? According to the new SF95 filing posted by Fox Business journalist Eleanor Terrett, Neroff sued the federal government based on claims that his agents were aware of the baseless nature of the charges. He also argued that some agents engaged in harassment and intimidation tactics, including fabrication of evidence, in order to prosecute him for extortion. Now, again, this is where it's actually super disheartening. As an American citizen, I want to be like, I don't believe this fucking guy. He's full of shit. He's lying. Like, our government would never do these things. That is what I really want to say and truly believe in. Like, I really do. And I think we could get back to that one day, by the way. I don't think we're too far gone to ever get to that, or I'm going to say get back to it, but get to that point. But I don't believe it. It's like what he says when he says the government has falsified evidence, essentially, or fabricated evidence, harassed them, intimidation tactics. I believe it. I believe it. People, if you like, who really doesn't believe this? If you were to say the United States government engaged in harassment, intimidation tactics, and even went as far as including fabrication of evidence, I hate to say it, but I believe it just off the strength of the shit I've seen them do in crypto. Neroff's legal team believes that damages caused to Neroff's reputation and businesses are significant enough to file a lawsuit against the U.S. government. And really quick, $9.6 billion. My first thought was, hey, just file that lawsuit and get as much as you can, right? Get a few million, get a couple million, maybe even get, $500 million or whatever. Like, you're not going to get that much from the government. But then I started thinking, as I'm reading the story, because I only read the headline, I hope he gets it all. I hope he gets the 9.6. I hope the government, the judge says, you know what? No, you're actually owed more. I hope he gets it. Why? To set precedent for the American government. Like, stop, like, I won't even say for the American government. It's not in our entire government. There are select individuals in our government working for people who do not have America's best interests at heart. To me, they're fucking treasonous, okay? They're not working for us, the American people. They're working against the American people. For those people in the government, to me, this will send a signal that, hey, that shit's not cool. It's over with. It's not going to keep happening. Because if we get enough lawsuits where it's 9.6 billion here, you get a Reggie Middleton patent enforced over here, you get something else happening over here. Finally, I hope the government will say, all right, let's play fair when it comes to this crypto thing. Banks, no, we're not listening to you no more, Wall Street. We need to play fair over here. Hopefully that is what happens. Now, I know I'm well wishing and thinking, but I hope that is what would happen eventually if enough of these lawsuits came to light and enough of these wins followed up as well. So this quote is saying, as a direct and proximate result of the wrongful conduct of federal agents and or officers, Mr. Neroff's well-being, personal life, and career were irreparably harmed. He incurred significant legal fees to defend. I mean, just the legal fees. That's how they get you right there. He incurred significant legal fees to defend himself while simultaneously losing income as a result of becoming a fair pariah in the crypto community. Why? Because no one in crypto wants to fuck with anybody who's associated with the government. Listen, it's kind of like hold on, I'm trying to look at this. He incurred significant legal fees. Oh, there it was. It's kind of like how they do rappers. Usually when they arrest rappers or anybody in the streets for that part, if you have stuff like jewelry, cars, all that, they taking all that shit overnight. They're taking it. They're going to confiscate it. And the reason why they're confiscating any and all valuables, not so they, I mean, part of it is building a case to say, hey, you know, what money did you use to buy this? But the real reason is so that you can't sell it. They're going to make sure they take you off the street so you can't be out there making money. Cut off your communication with everybody to make sure you can't get money. And then any asset you have, they're going to confiscate so you can't sell it. Why? So you cannot get any more capital to pay for a lawyer. They're hoping to stall you out as long as possible so you're at your weakest point and you sign that little plea deal and keep them at that 98, 99%, whatever they're at, okay? This is the same thing with the federal government. You want to win an easy fight, stall them out. Listen, bleed them dry. The federal government not run out of money. It's tax money. You will run out of money. So again, I can see where he incurred these significant legal fees for 4 years trying to defend himself. So again, according to Tarek Neroff, hired prominent lawyer Alan Dershowitz as a consultant on the case who believes that the case is unusual. Neroff is a serial entrepreneur, attorney, inventor of multiple international patents, and founder of the blockchain consulting firm Alchemist. He is also a blockchain pioneer known for his early involvement in projects like Ethereum in 2015. Again, not taking sides, reporting, but the way it sounds, I could see it being true. He was arrested by the FBI alongside his Alchemist associate Michael Halady in September 2019. Both Neroff and Halady were charged with extortion, with authorities arguing that they threatened to destroy a cryptocurrency startup if they are not paid millions of dollars in Ether. and I mean, honestly, I get where the government went with it, but you are picking and playing favorites. If Ethereum gave you that call, if Vitalik gave you that call and you went that direction, like, to me, if there are partners, advisors, like this is all like that's almost like a domestic dispute. We don't know how much work he did. If he did do as much work as he claimed, or he has that type of ownership that he claims, true or false, I mean, he could be in the right. I don't know. Let's see. The former Ethereum advisor repeatedly attacked Ethereum in the past, making serious allegations against the founders, Buterin, Joe Lubin, as well as Ethereum Foundation. The allegations include various aspects of Ethereum's development and operations, including fraudulent ICOs, personal misconduct, and collusion with corrupt officials. One of Neroff's claims is that Ethereum received a preferential treatment from regulators, which is referred to as ETHgate in the community. Now, again, if you've been following any of this, shit is kind of like it might have some validity to it. For one, if you know Ethereum, that's not the real Ethereum. A lot of people say Ethereum Classic is the real Ethereum, and that Vitalik Buterin hijacked Ethereum to begin with. So, I mean, if that statement is true, then that alone allows what he's pushing for to also be true, right? Second thing is ETHgate is real. I mean, we've been saying it's been hijacked by corporate folks, by the government, so on and so forth. There's a reason why they want to do proof of stake instead of proof of work so that you can essentially buy your way in. Again, if these things can be proven, the guy could have a point. So I I don't know. Jake said patents shouldn't be legal. That's BS too. If you can't protect your stuff, you don't deserve it. No keys, no cheese. Hey, not saying I agree or disagree, because my whole thing in the space is like, not just this space, but every creative space for the most part is like shit. Like how to, like, to me, I get it. Like patents are weird to me. Like you can come up with something nobody else on the planet for forever can use it, or like I don't know, you have to pay you. So that's weird. But regardless of how I feel, whether it's weird or not, it's part of life. It's here. That's not something I'm ready to argue, because it's just one of those things where it's like, bro, we trying to get Bitcoin and crypto popping. Like, you ready to take on a patent argument? Like, nah, that shit's staying here, man. It's gonna be here. But I get what you're saying. Let's see what else we have. Suing the government because the government did him wrong is an oxymoron. Fat lady not even warming up her vocals yet. Far from over. Oh, you already know it. Let's see. He's talking about my shock face I did. That's funny. I know, right? All right, let's see what else we got going on. All right, last but not least, Bitmax co-founder must face suit over God access trading desk suit rules. All right, this story is gonna be short and to the point. Am I sharing the right story? I'm on the wrong story. That's the last one. Hold on. Here we go. All right. So essentially, District Judge Andrew Carter said Benjamin Delo was central to an alleged scheme to use customer information to manipulate prices on the exchange. What do you mean, King? What has happened here? Well, oh, you know what? I did have my stories mixed up. I thought the last guy was a British citizen. Oh, I take that back. The United States is still fucking his own citizens, I think. I got it confused because I knew one of them was a British citizen. I thought it was the last story. That's why I said, never mind, the United States is not doing it to ourselves, but we still are fucking our own citizens. I take that back. This is the new story where they're not. And by the way, I've been thinking about people. I'm gonna definitely have to do two shows, one where I'm using profanity and one where I'm not, because I know some of y'all want the kids to watch it, and I want the kids to watch the show too, so I do have to watch out on that. But D'Lo, a British citizen, had asked to dismiss the suit last May, claiming U.S. courts have no jurisdiction over him. Of course, New York said, so what? New York District Court Judge Andrew Carter shot that down in an order signed on April 3rd and published on April 8th. Come on, my boy. You a British citizen. You should already know. U.S. courts still have it. We beat y'all. We do got jurisdiction still. All right, you got to go somewhere that has stood up to us and we ain't bucked down. You got to go like Russia or something, all right? Singapore, I think even. Plaintiffs, I'm just messing with all my UK friends. Plaintiffs, hey, we weren't in that war. We ain't got to worry about it. We can make fun of it. Plaintiffs has sufficiently alleged that Delo, I want to call him Delo though. Delo is better. Delo has purposely availed himself of the benefits of the forum the United States Judge Carter wrote. The order stated that Delo was central to alleged manipulation efforts and conceived of and designed a liquidation system allowing Bitmax to profit from manipulation. A group of Bitmax users filed a lawsuit in April 2020 against Bitmax and co-founders Delo, Arthur Hayes, and Samuel Reed, claiming they had a trading desk with God access to Bitmax customer accounts. The trio used customer information to determine which market moves will liquidate the highest number of users, which would net the exchange of a profit, and will conduct trades to make that happen, a lawsuit claim. So again, this is why, and all right, so much to go in the story. I only got a few more minutes left. I'm already going over time. I got to run today. So really quick, I just hit the bullets. Almost every exchange does this, period. I won't even say almost, they all do it for the most part, okay? The dexes are a lot better because there's an actual dex to the most part. They already have stuff codified to where that should not be happening. But yeah, the centralized Coinbase, Bitmax, I'm sure, as I haven't seen them do it, so I'm not gonna put it on them, but I'm sure Gemini would. We know fucking Robinhood does it. So don't get me started. I'm missing one. I'm missing one. Poloniex started getting there, but basically, yes, this is what wash trading is. This is what the fake volume is. This is when they liquidate you. And we always talk about, which is why you say you actually can't really go crazy margin trading and leverage trading on big exchanges, because whoever has the biggest trade at the moment, they already have it built in the code to liquidate your ass. Like, I've seen it happen to myself as well, where I did the TA. It was obvious. It was easy. It was going up, and then boom, I put it in the big buy order, and then almost instant, I was like, oh, y'all playing games. Y'all playing fucking games. And soon, listen, people, they like to play games, let me tell you, okay? So to me, this isn't nothing new. We've seen this across the platforms. If anything, if a judge is going to sue them for, if they're getting in trouble for this shit, Coinbase, the most obvious one is when Bitcoin Cash got listed on Coinbase. Like, stop it. If they're going down, let's bring hey, they got us. Come out the bushes. They got us, bro. They got all of us. I wanted to see them all go down for this. So yes, Have exchanges been using customer information to essentially trade and bet against you? Hell yes. Have they done it to liquidate you, whether you're going short or long? Hell yes. Will they continue to do it? Hell yes, because this is a brand new market. They've been doing it and getting away with it. And I think until you see more of this happen, more lawsuits brought up against the exchange for this specific reason, it'll continue to happen. Now, on the bad side of this is how we get government interference. This is how we get regulation. This is how we get the courts and judges and everyone else involved, because they're like, all right, you all clearly couldn't self-regulate, so we're going to do it for you. And you know what? I can't even be mad. Why? Because we had greedy exchanges. But this goes back to the actual white paper of Bitcoin. I'm going to end the show on this. The first few sentences: a peer-to-peer, a peer-to-peer, a peer-to-peer. It is not supposed to be on an exchange. We're not actually supposed to even be leverage trading all of this stuff, right? So because we made derivatives and different markets and plays from this asset class, this network, to be honest, now we have all this craziness that comes with it. And this is why we're still in the early chapters of the Bitcoin and crypto journey. Other than that, that's the show for today. Smash that like and share. I will see you all tomorrow. And again, 420 Board and Stone, Koreatown from 12 to 4 p.m. 419, Sabi the 3rd will be performing. Smash that like and share. See you all.